Where is the S&P likely to go next? That's the topic of today's video. To help answer this question, we're going to use not only Fibonacci levels that we've already drawn, we'll draw some new ones, and then we'll even come into intraday timeframes to understand how we can use those levels as potential magnets. Now let's get started first with our daily timeframe chart before we dive into the intraday charts. Now using the daily timeframe chart, we have two remaining Fibonacci levels to the downside, and they both seem like magnets right now, especially given today's price candle, although I don't think they get hit right away. Now the first level we have is 386.96, the second level 382.59. Both of these levels come from the idea that, hey, typically in the past the S&P has fallen this much in this bull trend that we're currently inside of, and we're looking to see if that's where price action stops and buyers come in. So if we do stop in either one of these two areas, that still gives proof to the idea that, hey, buyers are still there, buyers are hanging around, this bull trend is still intact, we're really just chopping around. Now the reason I think we're likely to break these levels is because the market pulse has also switched on that daily time frame. So that's one sign. We're now entering a stage of deceleration. If we switch over to a chart of the VIX, we load in a 1 hour time frame chart of the VIX. We also have the Bollinger Band reversal signal. That's this blue arrow which triggered early on in the morning. We had done a study where we took a look at how effective this signal has been with using the VIX to predict when the S&P is likely to have its next turn to the downside, and this was fairly effective. So that signal also printed today, which is another sign why I think these bullish levels are likely to be broken. So now, if we come back to the daily time frame chart in the S&P, let me zoom out and switch back to SPY here. The question is, okay, say we do come down to this 382.59 level and we even break below that. What are the fib levels that we have to the downside? Now to repeat this, I'll follow the same exercise we used when projecting these short-term bullish levels, but this time we're trying to project, okay, what have the swings in this bear market typically been like, and what happens if we project that from this swing high right here? We've seen so far that the S&P made the same rally in this move up. So what happens to the downside here if we project, say, this swing high to this swing low, and we project that from this swing high? That gives us a downside level of 334.69. What happens if we take the other swing in this trend? So this swing high to this swing low, same idea, one more time. That gives us an even lower level, 318.41. And what happens if we take the very first swing that we had here and we project that? That gives us a level of 348.97, which also overlaps more or less with our previous low here. So now we have three downside projections as well, which tells us that, hey, we know shorter term where we think the S&P is likely to go next. We know what we're looking for in terms of, do buyers come in, buy these levels up? Is this just a continuation in the overall shorter term bullish trend? Is it a fake out? Or do we break 382.59, which then opens up a lot of these levels to the downside, which we can play with intraday activity along with swing trades? Now to take a look at that, let's switch into a 1 minute time frame chart. I think this is a little easier to see on the ES futures, but the same setup holds true regardless. On the ES chart, if we zoom in, we can start to use the two different setups that we have to trade these markets on an intraday basis to take advantage of these downside moves. The first setup is a fade setup in which we're looking for price action to come inside of our volatility models and then get rejected from there, and we're looking to fade this price area. That's the setup we talk about most frequently, but in today's video, I want to talk about the second setup a little bit more, which is our trend setup. Our trend setup is where we take advantage of these squeeze tools right here, the squeeze arrows that we have available. This is the slingshot squeeze along with the squeeze signals indicators. Volatility Box members, these are included for free with your membership and built as part of our squeeze course. And we use this to project, hey, do we think this squeeze is likely to fire to the downside? If so, where do we think it's going to stop and halt? So let's zoom in to this first squeeze arrow that we see on our chart. Let me try and clean this up just a tad. So I'll get rid of the edge signals for the time being so we see fewer arrows. We have just our two squeeze arrows, the market pulse to help determine trend, and then our volatility box on the scalper model first to determine where we think price is likely to stop. So first off, we had our slingshot squeeze here and here on the S&P 500. This is the ES futures. This is in the 8 to 9 a.m. hour where we had bearish slingshot squeeze arrows. We can see here that squeeze momentum is declining, and we're thinking that the squeeze now is likely to fire short. Now this first arrow, we can see that squeeze does fire short, and it doesn't really have too much of a move here. We go down lower, really halts, we grind back up, come back to the market pulse. Market pulse has not gone green here at all, so we have very clear trend clarity. Now we see our second squeeze arrow also suggesting that we think price action is likely to fire to the downside. One more time here, we see that squeeze does end up firing to the short side. Where does it end up stopping? Exactly where that volatility box target line is from the exact hour in which that trade triggered. So for example, both of these arrows triggered in the 8 to 9 a.m. Pacific hour. This target line is where we think that price, or that catalyst rather, will take price to, where we think price halts. Take a look at what happens here. We can see wicks, 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 and this is that 9 to 10 a.m. Pacific hour. That's where price takes a breather. We take a little bit of a halt. On that 1 minute, a little bit funky too, where that market pulse goes green. Again, really weird things tend to happen in that lunchtime hour. This is one example of that. Now the lunchtime hour ends and we come back to the market. Now towards the tail end of this hour, we've had a breach of our volatility box levels, and price is even broken down below them. So we're now switching to the aggressive volatility box for downside projections here. So if I load in our aggressive box, we get our next slingshot squeeze right here. This is around that 10-10 mark. Same exact idea. We're looking for this squeeze to fire to the short side. It does end up firing to the short side. In terms of target, it's this gray target line from the hour in which it triggered. You can see here one more time, the squeeze takes us directly into the target. That's where we see our first little bounce. And then we come into even our cyan lines, triggering that fade setup. Now this fade setup for me did not work. This was a valid setup. It triggered just a few moments before the edge of the hour. This was a stop here on the fade. The trend today was extremely strong, and it simply was not worth fading the trend today. So we're focusing on the trend continuation moves. One more time, we see another arrow, this time towards the 11 to 12 p.m. hour, So now we're getting towards the tail end of when the markets are about to close. One more time, we see another slingshot squeeze. One more time, we're expecting the same momentum to fire to the downside. We do fire. First one is a very small 1-bar fire for the squeeze. We come right back into the squeeze, and then we have the actual move take place in terms of the catalyst. Now, if I zoom out, you can see that's the last trigger that we had for the day inside of the ES. And one more time, we use the same target line from the hour in which the trade triggered to project where we think price action will take us. We looked at the S&P 500 as now transitioning to the bearish side given this market pulse switch. We used that market pulse switch along with the VIX to get some downside levels here, 386.96, 382.59. If these levels hold, that still helps keep the bullish story intact. If we break even below these levels, we then projected some more downside levels, 348.97, 334.69, 318.41. And that then tells us the next place where we think the S&P is likely to go next before we see some sort of a pause, maybe a little bit of a bounce, or maybe we even break below this. Who knows? Anything is possible. But this is what, according to history, in this bear market so far, we've seen the S&P do before it tends to find a little bit of support and a dead cat bounce, if you will. All right, I hope you found this video useful. A lot of information that I threw at you, along with looking at intraday charts. But if you need to, go back, rewatch this. For all Volatility Box members, you can study these charts in more detail. You can also take a look at things like, say, the Qs. If you're more interested in the Qs, come to that same 1-minute time frame chart and study the same squeeze arrows signals that we had across the board today. All right, take care, everyone. Good luck trading, and I'll see you in our next update.